Picture this. You're standing at a crossroads. One path leads to short-term profits, the other to a sustainable future. Which do you choose? It's not just a hypothetical anymore. The world of finance is changing, and Europe is leading the charge. Welcome to the Economy Unpacked Daily YouTube channel. From Wall Street to your street, we share the world of money in a clear way. Today, we're diving into the world of ESG investing, a concept that's reshaping global finance. Gone are the days when investors only cared about profits. Now they're asking tough questions about a company's impact on the planet, its treatment of people, and its ethical practices. Europe has emerged as the front-runner in this shift, setting ambitious policies and creating a culture where financial growth must align with sustainability. But what exactly is ESG? It stands for Environmental, Social, and Governance. Three pillars that measure a company's responsibility beyond just financial returns. Think of it as a report card for corporate citizenship. The environmental aspect looks at how a business impacts the planet. Are they reducing carbon emissions, managing waste responsibly, conserving water? The social pillar focuses on how a company treats people. This includes employee diversity, labor rights, product safety, and community engagement. Finally, governance examines corporate leadership and ethics. Are executives paid fairly? Is the company transparent in its reporting? Do they have strong anti-corruption measures? Imagine a company that's actively reducing its carbon footprint, enforcing diversity in hiring, and ensuring transparent reporting. That's the kind of business that would score high on the ESG scale. It's not just about doing good, it's about doing good business. So why has Europe become the global hub for ESG adoption? There are three main drivers behind this leadership. First, EU regulations and the Green Deal have set the bar high. The European Union has mandated stricter sustainability disclosures and set ambitious climate neutrality goals by 2050. This is unjust talk. It's a legal framework that forces companies to adopt ESG principles or risk losing access to markets and funding. Second, Europe has implemented stricter corporate disclosure requirements. European companies must report on non-financial factors such as emissions and social impact. This transparency makes it harder for businesses to hide unsustainable practices. It's like shining a spotlight on every corner of a company's operations. Lastly, there's a strong cultural emphasis on sustainability in Europe. European societies place high value on social welfare and environmental protection. This is UNT just coming from the top down. Investors and consumers alike are demanding that businesses act responsibly. It's created a powerful cultural momentum for ESG investing. But what's in it for investors? Why should they care about ESG? Well, there are multiple benefits to this approach. For starters, it's about long-term risk reduction. Companies with sustainable practices are less likely to face regulatory fines, environmental disasters, or reputational scandals. It's like investing in a company with a strong immune system. They're better equipped to weather future storms. ESG investing is also attracting younger investors. Millennials and Gen Z aren't just looking for profits. They want their money to reflect their values. They're more likely to invest in funds that prioritize social justice and climate responsibility. It's not just about making money, it's about making a difference. Perhaps most importantly, ESG investing proves that companies can be profitable while also contributing positively to society and the planet. This alignment between profits and purpose strengthens brand reputation and builds investor trust. It's a win-win situation. However, ESG investing isn't without its critics and challenges. One major concern is greenwashing, when companies exaggerate or misrepresent their ESG achievements to attract investors without making real changes. It's like putting a fresh coat of paint on a crumbling building. It might look good from afar, but it doesn't address the underlying issues. Another challenge is the difficulty in measuring ESG performance. Unlike financial data, which is relatively straightforward to quantify, ESG metrics can be more subjective and varied. This makes it challenging to compare companies on an apples-to-apples basis. There's also the risk of overregulation. Critics argue that too many ESG rules may burden businesses, especially smaller firms, potentially reducing their competitiveness in global markets. It's a delicate balance between encouraging responsible practices and stifling innovation. Despite these challenges, we're seeing ESG principles put into practice across Europe. Major banks and asset managers are now screening investments for ESG compliance, excluding industries such as coal or arms manufacturing. It's like a financial filter, ensuring that only responsible companies make the cut. We're also witnessing corporate transformations. Many European corporations have shifted strategies to reduce emissions, improve workplace equality, and report transparently to investors. It's not just about ticking boxes, it's about fundamentally changing how business is done. The growth of ESG funds in countries like the UK, Germany, and France has been remarkable. These funds have outpaced traditional funds, demonstrating strong investor demand for sustainable assets. It's a clear signal that the market is shifting towards responsible investing. But the big question on everyone's mind is, does ESG investing deliver the same financial returns as traditional investments? Studies suggest that ESG funds can perform just as well or even better than conventional portfolios, especially in the long term. By avoiding risks tied to unsustainable practices, these funds may actually be better positioned for future success. It's important to note that ESG investing isn't just about maximizing short-term returns. It's about balancing returns with broader goals, ensuring that profits are not made at the expense of society or the environment. It's a more holistic approach to investing that considers the big picture. Looking to the future, we're seeing the ESG movement expand beyond Europe. Countries like the US, Canada, and Australia are beginning to strengthen ESG regulations and adopt investor-driven sustainability practices. It's like a wave of responsible investing spreading across the globe. Technology is playing a crucial role in this expansion. Artificial intelligence and big data are improving transparency by monitoring ESG performance in real time, reducing risks of manipulation. It's becoming harder for companies to hide behind glossy reports. The data doesn't lie. While ESG was once voluntary, global momentum suggests it may soon become a mandatory part of financial reporting worldwide. It's not a question of if, but when. As we wrap up, it's clear that ESG is reshaping global finance by redefining success. It's no longer just about profits, but about responsibility and impact. Europe currently leads this transformation, but the rest of the world is catching up quickly. So, let me leave you with this question. Would you prioritize ESG values over short-term profits? It's a decision that more and more investors are facing every day. We'd love to hear your perspective on ESG investing. Share your thoughts in the comments below. And if you found this video helpful, don't forget to like and subscribe for more content on finance, sustainability, and global markets. Until next time, this is Economy Unpacked Daily, helping you navigate the complex world of money, one video at a time.